Hey, it's Steve Zalunardo here with Treviso Realty. I got Joe DeMarco here with DeMarco Mortgages. This is actually my personal lender, does all my deals here in Southwest Florida, now my clients. The challenging thing we have as foreign nationals into a USA is financing. And so there's obviously two banks that deal with finance in the United States, that's RBC and TD, but their loans right now, like their loan amounts, like their percentage points, is still very similar to, let's say, a DSCR loan, which Joe's gonna talk about. And you know what, I'll give it to you, Joe. Like, what is a DSCR loan, and why is it like a better product for like foreign nationals?
Yeah, thanks, Steve. Yeah, so DSCR loan basically stands for, it's an acronym for debt service coverage ratio. And basically what that means is if your property that you're buying as an investment property, if the rental income on that property covers the debt against the property, meaning principal, interest, taxes, insurance, and any HOA that might be on that property, if it's a 1-to-1 ratio, then we provide you a loan. So we do not look at any type of income, personal income. We don't look at any type of personal debt. We don't look at any personal credit. It's basically all based on the cash flow of the property in 1-to-1. So meaning, very simple, if the rent on that property generates $2,500 a month rent on a house that you're going to purchase, and the total debt on that property is $2,500 a month or less, we give you the loan on that property.
So it's 1-to-1? Isn't it like a percentage, like 20% over the?
No, it's a 1-to-1.
So if you make $3,000 in rent and $3,000 expenses, you got the loan.
You get the loan, exactly.
Okay.
As long as for foreign nationals, it has to be 1.0 or greater. Okay. If you're not a foreign national, you have residency here or some sort of residence here in the United States, we can go less than a 1.0. We can actually do a no DSCR, and then that would just change the amount of money that you typically would have to put down on these loans. For current Canadian residents right now, foreign nationals we call them, you are required to put 30% down on these loans. And typically with 30% down on these loans in today's market, today as we record this video, you're probably looking at interest rates of somewhere around 7.5% to 8% on these loans, which is still really cheaper than myself as an American citizen. If I were to try to go get an investment property loan through Fannie Mae and Freddie Mac, which are big agencies here in the United States, the rates on those loans for me as a United States citizen is still going to be somewhere in the neighborhoods of 7.5% to 8%, depending on my down payment. I've been doing these loans with people right now, and we've been told that these rates on these DSCR loans today are cheaper than an American citizen trying to get an investment property here in the United States. Typically these loans will take, I think Steve said in Canada, loans tend to move a little bit quicker there than they do here. Your typical time frame for getting a loan here on a DSCR loan, as long as everybody gets us what we need in a timely fashion, you can expect 30 days from the time you do your application with me to the point where we go to the closing table. Typically that'll happen sooner, but 30 days is a good timeline. Now, you can put these properties in your own personal name here in the United States, or you can put them in an LLC. If you don't have an LLC, you can create an LLC today and close on the loan tomorrow in your LLC name. There's no seasoning required on the length of time that you have to have that LLC. You're going to have to provide some asset statements from Canada showing, where your assets are coming from for the purchase of that property. And there will be a couple of small documents that we need to get some kind of credit references from your bank for you. But other than that, they're a pretty simple and easy loan. Again, as long as that property ratio is out, there's no reason why we can't give you a loan on that property.
One question as an investor too, like our biggest problem, especially up in Canada, is getting loans on multiple properties. So like obviously you want to keep accumulating real estate in your life. And then when we have especially with conventional banks, like they allow like five.
Yeah. So that's a great question.
Yeah.
Most of the lenders that we use will say they'll give you 5 loans at one particular lender, right? But all these lenders, in fact, I was just on a webinar for this particular loan, DSCR, last week, and the lender of that bank said that their guideline says 5, but they've had loans where they've done 10 loans for one particular investor. So it's going to be on a case-by-case basis.
But there's still a limit of 5. Is that also your conventional?
10.
10
on a conventional
but
loan.
why though? That's just the...
It's a risk factor.
Risk factor?
That's all it really is, a risk factor.
If you did 10 loans with, let's say, one bank, can you do 10 loans with another bank? But then your ratios are all mixed.
Yeah, it's going to be, it could get messed up, but...
But if you're sticking them under LLCs, like corporations, does that count? Or is that now you disguise it as an LLC?
Yeah, it's an LLC, but it's still your name as the primary person on there. So, but again, these banks, if they're good loans, you're a good borrower, and you're 5 loans in, you've had no defaults, they've never had to call you to shag down where your payment is, they're going to continue to loan.
How about this? Like, you look at these big investors that have hundreds of properties, hundreds of doors. Like, how do they get all that financing?
A lot of these investors, it's cash, or they have private investors that they go to for a lot of these loans on the streets. Whether, you heard the term hard money lenders, right? It might not be so much a hard money lender, but they have investors just like anybody would go and get an investment.
Fair enough, but it's just not the conventional way then?
No.
Okay.
No, the problem with conventional, a couple of years ago, up until I think it was just a couple of years ago, Fannie Mae and Freddie Mac were pretty lenient certainly on second homes, right? So the first property you buy in the United States as a foreign national would be considered your second home, right? But you can only have one second home, right? So anything after that was considered an investment. Second homes, Fannie and Freddie were very lenient on. The rates were very similar to a primary residence.
Yeah.
Investment properties were always a little bit more riskier, so the pricing on investment properties for rates were always a little bit higher. But up until it was about a little more than a year ago, Fannie and Freddie started treating investment properties and second homes equally the same, and they've actually increased what's called the loan level pricing adjustments for those properties. So meaning the add-ons to the interest rate, they just don't want them anymore. They just find them to be more of a riskier loan for people here in the United States, because here in the United States, somebody's got multiple investment properties, they've got a second home, things get bad, what's the first thing they're going to let go? Those investment properties or that second home before they will their primary residence. So if they're going to do an investment property, they're going to make sure that they, meaning the investors, are going to be in a really good position, and they're going to charge it for that. So
interesting. So the DSCR loan is basically picking up after Fannie Mae and Freddie
Mac.
The
DSCR loan is just it's a fantastic and powerful loan for investors. It really is, because in the United States we have to have a certain credit score to qualify for them, but you're not looking at income, you're not looking at your debts, you're basing it on the cash flow of the property. So it's a great product for investors to help build their real estate portfolio. It's the easiest way to get a loan. Yeah, maybe the rate's a little higher than normal, but you have to jump through a lot less hoops to get that loan.
Let's talk about like the breakout period and all that stuff. What's the penalties? Because the Canadians are going to ask. Because in Canada, when you break out a mortgage, it's like a severe penalty. You got to pay all the interest up front and this whole thing, right?
Prepayment penalties?
Yeah, sometimes it can be 15, 20K depending the loan. Like what is like the breakout? So let's just say they get into a DSCR loan at 775. Rates are down. Again, I don't know. Do you see 5% at some point at the end of this year?
I could wish for 5%.
5.5? Like a conventional loan?
Yeah, I mean, I don't know about on DSCR loans if you'll see rates get that low, but as far as the prepayment penalties, so here in the United States, we used to have prepayment penalties on primary residence as well. They were offered. Right now they're illegal here in the United States on primary residence. For these type of loans, DSCR loans, there are prepayment penalties. They're as high as 5%, and they're 5 years, and they're as low as 0 years. Depending on where you want your interest rate is going to be determined by the prepayment penalty.
So if you get a $200,000 loan, it would be at 5%, 10K.
So there's the prepayment penalties are 5 year all the way down to 0 year. With a 5-year prepayment penalty, you're going to have a better interest rate. With no prepay, your interest rate's going to be a little higher. Either one of them, though, depending on whatever prepayment penalty that you take, it's going to be 5% of the remaining balance is what's going to be if you pay off early with a prepayment penalty.
Okay.
Now, you know, most investors, as long as that property's already cash flowing, let's say you're at a rate of 7% today, if the rates got down to 5.5% or 6%, depending on what your balance was, it might not make sense to refinance it, you know, or pay that prepayment anyway, because your investor is paying that mortgage payment anyway, right? So it might not make sense. But if there's a big discrepancy in what you started out the rate today, and all of a sudden we get back to 2020 and rates drop to 2%, well then of course then that's going to make it's going to make a big difference to go ahead and refinance and eat that prepayment.
So just ride it out 3 years, because you can do a 3-year buyout, right, or 3-year loan. Basically.
You can do a 3-year prepay. You can do a 1-year prepay if you want. If the rate, if as long as the rate, or you can just take the lowest rate and buy the prepayment penalty out up front.
But the deal we just did now, that's a 3 year. So that's a 3-year term. Like it's held for 3 years. He can't break out of it.
He can't break out of it. But if he decides to refinance it or just pay it off before that 3-year, whenever he decides to write that check to pay that initial loan off, it's going to be a 5% of the remaining balance is what he would have to pay for.
Enough.
Yeah.
Okay.
Yeah.
I think at the end, like. It's probably a good idea. Even cash flowing properties at 5%, everything makes sense. Even now at 7.5, it's like you're barely touching like any profit. It's just normal, like not just this market, any market. Yeah. So if you can hold on to a property at today's prices, like because obviously we're heavily infused with inventory. If you can you can buy a property at these lower prices, hold it for the next 1 to 3 years. While the rates do come down, ultimately we can the cash investment will look a lot better, right?
100%.
It'll go from like a 2 to 3% ROI to like a 7 to 8% just overnight.
Yeah. I mean, they're great loans. I mean, DSCR loans are great loans. Or at the end of the day, they're the easiest loans to get done and get approved. They're a little more timely as far as the length to get them done. Maybe again, if you're trying to get that loan with the LLC, it takes you a little time to get your LLC drawn up, get your EIN number if you need that as well. But other than that, they're very simple and easy to do, right? And listen, we all lenders here in the United States offer DSCR loans. But the difference between DSCR loan and conventional loans, we all go to the same place for these loans, the money for these loans. So everybody's terms are going to be very, very similar. Not one lender is going to be much different than the other. Because I remember when we first started talking about these loans, we thought we had a lender that was so much better than everybody else. And come to find out, that wasn't the case.
He snipped them at the end.
Snipped them at the end, yeah. So the terms are very similar. It's just a matter of who you're comfortable doing business with. Okay.
Joe's going to have another video, because I think it's like 14 minutes now. Joe's going to have another video, just more detail on more, if you're like more in specifics. We'll have Joe's information attached to the video. And then that's pretty much it.
Yeah, and my contact information is there. So obviously, if anybody ever wants to talk to me, has any questions, you're thinking about buying property here in the United States and you want to talk about the financing end of it, I'm happy to help anybody answer any questions, even if we have no intentions of working together.
Well, we hope that we're going to work together.
Yeah, but that's what I'm saying.
Okay, great. We'll wrap this up and we'll get you in the next one.